Welcome to Mortgage Chicks with Hot Tips. I'm Diana Harvey.
I'm Elizabeth Hole.
I'm Kim Hairsted.
I'm Cindy Walker.
And I'm Stacy Van Skank.
Today we're going to talk about cash out refinances. A lot of people have asked, should I do it, shouldn't I do it? So we're going to take a deeper look into what it means so you can make an informed decision. So Stacy, what is a cash out refinance?
A cash out refinance is where you actually take the equity out of your home with a new mortgage loan and you can do anything you want with it. You can do debt consolidation, home improvements, put it in a savings account for a rainy day, but a lender doesn't care what you do with the money. It's your equity. You can take it out.
Okay, so Cindy, how much cash can you get from a cash out refinance?
You can get back 80% of whatever is left after your mortgage balance minus closing costs for your cash back.
Well, golly, Cindy, looking at what values are on properties today, that can be a lot of money.
It sure can.
Stacy, any examples of what you could do with that money?
For example, let's say that your home is worth $300,000 and you're going to do 80% loan to value. And let's say the total that you would pay out between the first mortgage and closing cost is $200,000. You could have $100,000 in equity. $100,000. This is earned money. It's people's savings accounts. So, example: 300, 200, 100,000 equity.
So what's interesting too is some people have asked, well, how do I pay back the cash? And what's interesting is it's just now one new mortgage, one new term, 15, 30, 20, whatever you decide on, new mortgage, one payment, and you've got that nice, in Stacy's example, $100,000 that you can use. So Kim, what are some of the pros and cons?
So there's a lot of pros when you take out a mortgage and get cash back. You can pay off high debt credit cards. You can pay off cars that maybe have a higher interest rate. Say that you have some student loans that are lingering, you can pay those back. So these are all good advantages that you can do, and those are all higher interest rates even than the rates going up right now. I've saved people up to $1,000 a month, taking their car payments, their credit card payments, lumping them into their loan, and voila, they are $1,000 less than what they were before, and they have cash in their pocket as well. So there's a lot of advantages to doing a cash out refi, even with the rates slightly higher than they were last year.
I have a lot of people that I've refinanced on a cash out refinance this year, and they call me afterwards and they're like, do you know how much my credit score improved after consolidating
Oh,
debt?
big.
Oh,
Yeah.
absolutely.
So it's a after the fact kind of con or pro for
Because
doing a
they've
cash out
paid off their
refi.
credit cards and their
And
cards, so
yeah.
they have less debt.
The
So it's huge.
residual effect.
Yeah, there's lots of residual
Yeah, I
effects.
had a girlfriend text me the other day. She's like, I love you. My credit score is 800. And when I did her loan, it was like 626.
Wow.
She paid off a whole bunch of debt, and now it opens opportunities for people to make other purchases.
For sure.
Well, and the people can also use that money to make home improvements.
Yeah.
So,
Kitchens, baths,
Add
I've
even
seen a
more
lot of
value.
that.
And
Put
more
a
value
pool
to your
in.
property.
Yeah.
Yep.
Absolutely. And it's hard to think that, after we've talked about all these pros, that there are a couple of downsides, things that you want to be careful of when you're doing a cash out refi. Basically, the biggest one to me is taking a step back in your term. So and the rates are at such a point where, if you've had a 30-year term and you've only, been paying on the loan for about 3 years, you may not necessarily want to go back to 30 years. Talk to us because we have 25-year terms, we have 15-year terms, we have 10-year terms. So we can do it where you're not going all the way backwards, because that's probably one of the things that I hear the most. I don't want to go backwards. I paid in so far. How can I prevent from going backwards?
Yeah, I tell my buyers that they can just jump ahead 5 years, and they can literally save $30,000 to $40,000 in interest jumping ahead for 5 years.
Yeah,
Absolutely.
for sure.
So you take the disadvantage and make it an advantage.
Yeah.
There you go.
And those people that get paid bonuses and things like that, I've actually had some where we did the 30-year loan, but we looked at what would it take to pay it off in 15 years, and they've said, you know what, once a year, when I get that bonus, I'm just going to put that down. But it's coming up with that plan of how to take that disadvantage and make it an advantage.
Well, and something that wasn't mentioned specifically here, but with the equity the way it is, say a year and a half ago you only had 3% to put down or 5% to put down, you need to take a look at that, because you may be able to get rid of your mortgage insurance.
Oh, for sure.
So even, I know we're hearing rates are higher, still make that phone call, because even if the rates are a little bit higher than where they were, you could be paying $200, $250 a month just in mortgage
And
insurance.
mortgage insurance and save
So
that as well.
that bump in the rate still saves you significantly by being able to, and basically, we all know mortgage insurance is just tossing your money away.
Exactly.
I have someone closing literally right this second while we're filming this podcast. Her rate when she purchased 9 months ago, FHA, 2.5%. She is doing a cash out refi at 4.25, 80% loan to value. She is getting $100,000 cash out a year later, and her payment is going up $70 because we got rid of the PMI.
There you
Wow.
go.
And she's gonna do all these home renovations she's really excited about.
How
She's excited
cool.
that she bought a house, and now she is excited earned equity, that now she gets to do all the updates and renovations she wants to do. And
That's awesome.
I get a lot of, I don't know if you guys do, I get a lot of phone calls, well, I don't wanna take all the equity out of my home because what if the market crashes? I don't wanna be upside down in my home.
Right.
And I tell people, none of us have a crystal ball.
Right.
But we do not foresee any housing bubble, and we're not giving 100% of the value of the home.
Right.
We're only
Right.
doing 80,
Right.
so we're protecting
We're
them.
getting there.
And even if it's a slow appreciation at 7%, which is what it used to be.
Normal,
Right.
average.
You know, it may not be 25% what it is today, but even 7%, they're still going to be going
gaining
upwards
that
and
equity.
Right,
onwards.
and 7% is not 27% on your American Express bill or your Visa, you know,
Exactly.
and that's what the Fed raising the rate, you're gonna
Or
see
10%
those
on your car
in your
loan.
credit cards.
And your car loan.
Absolutely. So just because you're hearing the interest rates are higher, doesn't necessarily mean a cash out isn't a good idea.
Right.
Call us. Let us put together that picture. What are your goals? We may be able to get you there and you be just so pleasantly surprised.
Yeah, and just to add a little caveat there, a lot of people have are 62 or older. Reverse mortgages are also a great way to get cash out and not have a mortgage payment at all.
There you go.
So we do reverse mortgages as well, and they're not like the old days.
So the one thing too, in looking at the debt consolidation aspect of it, especially when you're looking at changing the term and going back to a 30-year term, I'm sure you guys do this as well, is we sit down and say, okay, you're making a $300 car payment and you're paying $50 on this credit card, this one and this one and this one, and all that's gonna be gone.
Yep.
So how much of that now can you put towards the mortgage to pay it off early? So that's the other conversation we like to have with
Yes.
everyone, to talk about the full financial plan of what it means to do a cash out refinance. So we've talked about what a cash out refinance is. We've given you a couple of examples of how it can work. Told you how you can pay it back. We've looked at some of the advantages over it, and the one minor disadvantage really isn't really a disadvantage if we talk it through and figure it out in your best interest. So hopefully this has given you guys some great information on what a cash out refinance is, so that you can help make an informed decision if it's time to pick up the phone and give us a call.
If you have any questions or ideas for future podcasts, please send us an email at mortgagechicks@vandykemortgage.com.
Please be sure to follow us on Facebook at Mortgage Chicks with Hot Tips.
Turn into our YouTube channel, like, comment, and share.
And don't forget, we're also available wherever you listen to your favorite podcasts.
Thanks for watching, guys. We'll see you next week.